Hello investors and traders, today I'll speak about S&P 500 Elliott analysis, technical analysis using the Elliott Wave. So today we can see that S&P 500 down about 2%, Nasdaq also 3%, Russell 2000 about down is also 2%, the DXY usually growing when the market is going down, and still the treasury yield bond is elevated. So let's check the firstly the S&P 500. We still, as I told you previously, it's expanding leading diagonal, first, second, the third, fourth, and the fifth. So now I'm expecting to see the nearest future. Of course, S&P a little bit lower. It's my target is 34.02. So from this level, from current level, there is a potential about 5% to get down. So then of course we might see bounce wave B, and then the final, and then it's possible another move down. It would be C. So then finishing all this ABC move. It's my best scenario, and there is another scenario that here it was the first wave, the second, here somewhere in 226, 27, maybe the third. But this scenario is alternative one. I'm not sure at all in it. It's alternative one. Anyway, these both scenarios telling us that in the nearest weeks we might go down. Then the Nasdaq, as I told you previously, the next actually most probably we are breaking this this major support level of 10,000, and the next level is here. But here please pay attention that currently now the RSI momentum indicator at a weekly time frame is already 35, so most probably we can see bounce from this support level. So the Nasdaq is a little bit harder to predict. Anyway, both indexes I'm expecting to see a little bit lower. And of course the small caps, Russell index, if the big guys like S&P and Nasdaq is under pressure, so of course the small caps also there is no chance to survive. There is here a major support level 168. I hope it will withstand. If no, here I don't see in the nearest future any support levels. Maybe this one, yeah, maybe this one, but in this case there is a very nice possibility to see a little another move down about 5-6%. I'm not sure, but anyway, now with this index all the US stocks looks very weak. And why so weak? I have a nice picture for you. It's the Michigan US inflation expectation index. We can see that in the near future the inflation expectation is more than 5%. It's a lot. It's about it's even higher at a level say 2008, 2012. So it's a big problem, the inflation, and the expectation of the inflation is really very high. We can see in the long run, it's also about 3%. So it's still continue to be elevated. So the problem, I think in my mind, it's the main problem why the stock market under pressure, and we may continue the stocks to fall. And of course all this problem with the inflation is connected to the US treasury bonds. The yield of these bonds, the 10-year is 4, the 2-year even 4.50. So it's a huge problem. We can see from the technical analysis it decreasing channel. Now we got out from this channel. I even don't know where is can be a stop here. Maybe 5%, maybe 6%. But when we see such huge inflation, it may continue to raise. the yield curve is actually continuing to be elevated because the risk in the near term is higher than the long run. So actually it's a very strong signal of recession. I think maybe in 1 quarter, 2 quarters from now, it will be detected that now we're in a recession, because actually I see that now we're already in a recession. All the signals of it telling that yeah, it's really recession. The DXY, the treasury, the stock markets, that it's recession. So we'll see. Don't forget to subscribe to my channel. I have a lot of videos about stock market, stock analysis, technical analysis, Elliott waves, and I think that yeah, in 1 quarter from now, maybe at the beginning of the year, so it will be over the government bodies, all the US Fed, no Fed, the Treasury will actually admit that it was a recession. So we'll see, we'll check. But now, anyway, it's very interesting time. So generally speaking, the biggest problems are the inflation, the first one, and the second, of course, the interest rate hikes by the Fed. So all these the reasons are leading DXY, the index dollar, to such high levels like 1030 even, so very low. The dollar is very strong relative to other currencies, so it's also a problem. It's by the way, it's a problem for the American companies because demand for their products maybe not so high. I mean, Apple, Google, Amazon, so of course they are selling their product generated by dollars, and and when it's so strong, so it's a problem for foreign companies, for other countries to buy their products and services. So anyway, I hope that it will be finished in a few months, and then maybe it will be the best level and the best time. And don't forget that in the stock market, a very important thing, it's the timing when you forget about your cash and start buying stocks, start to buy really nice companies with a huge potential, with a nice value, with a nice cash flows and revenues and other stuff. So if you like this video, don't forget to subscribe, press the like button, and see you on the next time. Bye.